Matt, there's been some wild trading in energy ETFs in the last week. Heavy volume in the S&P Energy ETF, that's XLE, which you manage. Heavy volume in the Exploration and Production ETF, that's XOP, the big exploration and production companies. It's at a new high today. But I'm wondering if you can sort of differentiate it. The investors always want to know what's the difference. Where are the bets being made in energy right now?
Yeah, I mean, so XLE, broad-based energy sector ETF that tracks the S&P 500, market cap weighted, is going to have a heavy allocation to both Chevron and Exxon. Obviously, those firms have some pretty substantial international revenue. If we look at XOP, it's modified equal weighted. It just focuses on the oil producers. And that's going to have a little bit more of a domestic-oriented feel to it. And I think that's why initially on Thursday when the news broke, we saw really a dislocation between broad-based energy and more domestically oriented energy stocks. I mean, XOP was up on the day while XLE is down. But in both instances, we've seen heavy trading volumes increase over the last few days, but also inflows. I mean, XLE has taken over more than $500 million in the last 2 days, and we've seen XOP have inflows as well as traders really start to position for what we're likely to have as an elevated oil environment, but also elevated oil volatility environment that's just supported by broad-based uncertainty around the whole entire commodity complex.
Yeah, Jan, you're the commodity maven here. For many years, I've turned to you for your expertise in the commodity space. You run the Van Eck Oil Services ETF, that's OIH. This is Schlumberger, Halliburton. It's all near a new high. All these stocks are up 30% this year. I guess a fundamental question, how much more can these stocks move up, given that a lot of producers, Occidental on Friday, they've not announced big production increases. Everybody keeps saying, oh, they've got to increase production. They're being very conservative. That leaves you with oil prices. Can oil prices stay near $100 at this point?
Well, I think the whole commodity complex, just to take a step back, has generally been in a bear market for about 10 years because there was too much overproduction chasing China. And all these companies need to get a lot more disciplined, and you've seen that. I think OIH, so oil services companies, provide obviously services to the energy producers, and the energy producers have been very disciplined, to your point and to Matt's point. So I think we've got a lot more upside to OIH if we expect oil prices to stay high. Eventually, the majors and the upstreams will increase capacity, and OIH will be a beneficiary of that.